Like candlesticks, the Ichimoku indicator is a fine Japanese creation. I'll explain how each component of the Ichimoku is calculated and how you can use it to build a trend-following strategy for the dollar-yen. The Ichimoku Kinko Hayo, translated to one-glance equilibrium chart, is a popular trend-following indicator. It helps traders quickly discern market direction and support and resistance levels. The Ichimoku is included in MT4 and is plotted here for the 4-hour dollar-yen. It consists of 5 lines, which are meant to be used as a complete system. First, we have the Tenkan-sen, which is also called the conversion line. It is the average of the highest high and lowest low over the past 9 periods. It is similar to a fast-moving average and is commonly used to generate entry signals. Next, we have the Kijun-sen, also called the baseline. It is the average of the highest high and lowest low over the past 26 periods. It reacts more slowly than the Tenkan-sen and is often used as a key support and resistance level. The third line is the Chikou, also called the lagging span. It is the current close plotted 26 periods back. It helps detect breaks of support and resistance levels. If the Chikou crosses above the price, it implies a break of resistance and the market is bullish. Conversely, if the Chikou crosses below the price, it implies a break of support and the market is bearish. Ideally, you should only jump on board a trend when the Chikou is clear of prices. The last 2 lines form the cloud or Kumo. The first line is the Senkou span A, which is the average of the Tenkan-sen and the Kijun-sen, plotted 26 periods ahead. The second line is the Senkou span B, which is the average of the highest high and the lowest low over the past 52 periods, also plotted 26 periods ahead. The Kumo represents a support and resistance zone for the market. Here are some key points. The market is bullish when prices are above the Kumo and bearish when prices are below the Kumo. A thick Kumo is a result of a volatile market and provides stronger support and resistance. An upward sloping Kumo indicates a bullish market, while a downward sloping Kumo indicates a bearish market. I have found the default look-back periods of 9, 26, and 52 to provide a good short and mid-term outlook for the market. I personally wouldn't bother tweaking them. There are numerous ways to use the Ichimoku for trend following, but I have found the Tenkan-sen and Kijun-sen crossover, also known as the TK cross, to produce the best results. Let's use the following entry conditions for long trades. Rules are symmetrical on the short side. When the Tenkan-sen crosses above the Kijun-sen, the market exhibits bullish momentum and a buy signal is produced. There are 3 signal strengths depending on where the Tenkan-Kijun crossover occurs relative to the Kumo. If a bullish crossover occurs above the Kumo, the signal is strong. If the crossover occurs inside the Kumo, the signal is neutral. If the crossover occurs below the Kumo, the signal is weak. To maximize win rate, I will only trade the strong crossover signals. In addition, I want the price to close above the Tenkan for longs. This ensures short-term momentum is in my favor. When the above entry conditions are met, I'll place a buy stop at the previous high. The chart here shows a strong bullish Tenkan-Kijun crossover. Let's talk about trade management. Ichimoku traders often use the Kijun as a stop loss and trailing stop. This is a sensible option and is similar to using a medium speed moving average. Unfortunately, with the entry conditions above, there will often be insufficient breathing space between the entry price and the Kijun. The chart here shows an entry with a 30 pip stop loss distance, which is too small for the 4-hour dollar-yen. Stops that are too tight are usually a recipe for disaster. One way to mitigate this is to place a buffer between the Kijun and the stop loss. For example, for long trades, you can place the stop at 1 ATR below the Kijun. For this case, instead of using the Kijun, I will simply implement an 80 pip stop loss and trailing stop. Finally, to avoid weekend gaps, I will exit the trade on Friday at 4 PM New York time. Now let's program the strategy in AlgoWizard. AlgoWizard contains a pre-programmed Tenkan-Kijun crossover condition, so you just need to select the signal strength. We want a strong one here, meaning the crossover occurs above the Kumo. For the price above the Tenkan condition, select the Tenkan line under the Ichimoku indicator. The entry price and then the trade management were added with a few clicks. That's it. I'll now backtest from 2003 to 2021. To improve precision, I will use the 1-minute data tick simulation backtest model. With this model, open high-low close prices on the 1-minute time frame are used to simulate tick movement. This means actions that are usually executed in the middle of a bar, like the trailing stop and the Friday 4 p.m. close, will be more precisely reflected in the backtest. The equity curve is consistent, and the 1.74 profit factor is pretty good. There are only 165 trades in the backtest though, which translates to about 9 trades per year. This is one reason I prefer not to trade anything above the 1-hour time frame. On the bright side, part-time retail traders can easily trade this with a manual approach. All you have to do is to plan your toilet breaks in advance. So the Ichimoku is a great trend following tool that conveys market sentiment and produces entry signals. If you want to improve the entry-level strategy above, here are some ideas. You can evaluate the Kumo's slope and thickness. A thick upward sloping Kumo bodes well for long trades. Or you can check the Chico's location relative to prices. You want the Chico to be clear of prices, which indicates that support or resistance has been broken. Such refinements will likely be necessary if you intend to use the Ichimoku for trend following on the lower time frames. Hopefully this video brought value to you. Please support the channel by liking and subscribing, and I'll see you at the next one.